Welcome back to the show. Joining us on the show now is Mr. Kang from S&P Global Platts. Kang, hi, thank you so much for joining us. First of all, on the crude oil prices itself and the kind of jump up that we've seen, and everybody from Goldman Sachs to JP Morgan are now talking about 100 plus kind of levels by the end of this year and next as well. What's your own sense?
Thank you very much for having me. It's the current elevation of oil prices have been the results of the several months of high demand seasonally, particularly if we take a little bit look back from like April or May until like the current month or August to September. We globally we have like 4 million barrels per day month demand growth. And we were expecting, to see the high prices. So this is what has happened already. It's a very tight market. Oil demand is at its peak this year. However, if you talk about going forward, interesting thing is starting from this month and going towards like January, February, we are seeing a demand drop by like more than 3 million barrels per day. So fundamentally, the market is softening towards the end of the year and early beginning of next year, not the other way. So we are seeing maybe heading towards below $90 rather than go over $100. Of course, daily fluctuations are always there, but fundamentally the market is become more soft over the coming months.
Kang, what's your sense on what OPEC and allies will do? Because as of now, much of support comes in from there too.
Yeah, the OPEC is doing a job that is effective. Eventually, all the non-OPEC producers are really on autopilot sort of a state. They are maximizing their production for most of the small companies, and except for some majors, have some kind of a consideration. Otherwise, most of the non-OPEC countries are maximizing their production. So OPEC is in the driving sort of seat, and of course led by Saudi Arabia. So their production cut policy have been effective so far. The prices we're seeing today, oil, is a result of the management of OPEC. Without OPEC management, prices could have gone down in a big way.
Kang, also, with the crude prices rising as of now, as you said, by year end and beginning of next year, we might see some softening in prices. But from where we stand and the kind of gains that we've seen in past 1 to 3 months, what is your sense on the impact we've seen in the fuel prices? The jet fuel prices have been rising. We are hearing about ticket prices going higher because of that too.
Yeah, exactly. Good point. As the main component of the cost for gasoline and diesel for most countries around the world, high oil prices, crude oil prices themselves have pushed up the base of gasoline and jet fuel. What's worse is because it's also the reason for the high prices is because of peak demand. Short-term peak, not long-term peak. Short-term peak demand we are seeing right now in August, which means there is a high demand for gasoline and diesel as well. So that kind of stretch the refinery, making their margin good overall, which means that consumers will are paying a bit high price. However, as the price kind of ease over the coming quarter, or particularly in the first quarter of 2024. And with the demand sort of coming down, not only the base of the gasoline and diesel prices are coming down, the overall demand is also become a little bit sort of a more loose for on the demand side. So that will improve the gasoline and diesel prices, both the base price and also the margin.
Kang, very quickly, we mostly see that during or before winters, the prices rise. Do you expect that kind of a pattern this year as well?
Not quite for oil. It's actually exactly that is the case for natural gas and some other fuels in the winter use. For oil, is a little bit. There is a change of the seasonal change, more demand for heating oil and everything. But in the meantime, the demand for gasoline and even jet fuel will come down to balance the overall oil demand. So it's a changing sort of a guards in terms of the what type of fuels. Some fuels will become like kerosene, some diesel, and some fuel oil may be in high demand. Other than that, the transportation fuel will become moderate. So it's balancing out each other. So the winter season is, compared with the summer season in the Northern Hemisphere, is a little bit more moderate than the summer season.
All right, that doesn't sound so bad. Actually, good news coming in for travelers there. Kang, thank you so much for joining us. Thank you for joining us with your sense on all of that sector, which is energy. With that, it's a wrap on Halftime Report, but stay tuned because Business Lunch will take all the action forward.